Tesla shares are actually lower right now, reversing some of those earlier gains that we saw with the stock off just about 0.6%. This coming after the company came up a bit short in its earnings call last night and earnings results last night. They missed the street's expectations of both earnings and sales for the fourth quarter. Its automotive revenue falling 8% from a year ago. Tesla blaming lower selling prices across its lineup for that drop. Joining us now to break it all down, we want to bring in George Gianarikas. He is Canaccord Genuity's managing director. George, it's great to have you here. So my first question, what I wanted to ask you was why we weren't seeing more of a trade here in terms of the fundamental story when it comes to Tesla. Because after we got these results last night and very much this morning here in earlier action ahead of the bell, we actually saw the stock rising. Now we're seeing a bit of a pullback. How much do fundamentals matter to that stock price reaction that we're getting?
Well, look, on the call, and we agree with him, Elon Musk was incredibly optimistic about the future of autonomy and the future of robotics. All very good generational growth opportunities. However, objectively, we weren't that excited about the results, and some of the near-term commentary left us, less than nourished. I mean, first, they basically didn't commit to their 20 to 30% growth guidance for 2025. They did say they would grow, but that was a number that Elon Musk gave on the previous call. They missed their 2024 delivery guidance, which we knew about a month ago. Their margins were pretty weak. And if we're reading this correctly, the FSD rollout, full self-driving rollout in Europe and China is not going to happen in the first quarter. So there are a lot of little things that happened during the quarter that weren't great. So obviously a very good outlook for 26, 27, 28. But 25 and the results were kind of squishy.
So, George, what do I make of that if I'm a Tesla investor? I mean, how do I understand at what point the margin story is going to matter again, right? I feel like we've teetered over the last 18 months between, margins are a big problem. Tesla needs to figure out margins. Where's the trough in margins? Felt like we maybe moved past that story last night, maybe not. I mean, how much does it matter over the next couple months? Is it going to matter if this comes up again next quarter in earnings?
Look, we have a couple of catalysts this year that are still out there. Number one, we should get some additional vehicles. The new Model Y, apparently orders are very, very good, and it's a beautiful car. And we also have a fleet of unsupervised full self-driving vehicles coming in Austin in June and potentially other cities in the United States. So there are things to look forward to. But at the end of the day, you need earnings, right? And the earnings growth and the earnings power of Tesla will be dictated by its growth in deliveries in the near term and the margins. And so, look, the margins have been under pressure for a while now because of financing incentives that they've given, price cuts that they've had to put in place because of the increase in interest rates. So we should see that. We believe we'll start to see that really take hold in 26, 27, 28, based on increased scale and increased adoption of full self-driving. But we have to see it, right? This is our expectation, our hope, our estimate. But ultimately, we have to see proof of that. So, we'll have to wait and see how things trend this year.
And George, this is all up against a worrisome and a tough macro environment, right? When you take a look at consumer spending and what that appetite seems to be for EVs, and then you just take a look at the Fed's decision yesterday, holding rates steady. This is something that Musk has really sounded off on before, just in terms of that higher rate environment, problematic that could be here for Tesla. Does that then to some extent, put a cap on some of the growth that we could see?
Look, they're battling a couple of things this year, right? So it's probable that EV incentives in the United States get rolled off based on the current administration's objectives. So that's going to be a negative headwind. On the other hand, they have the new Model Y and potentially other vehicles to help them grow. And it's going to be a battle of those two things. China was really strong in 2024. It'll probably be strong in 2025. But Europe and the US have to catch up to that growth. So we'll see how the tailwinds and the headwinds match up against each other. But we expect growth, but it's not going to be that easy this year.
George, I want to play a bit for you from last night's earnings call. Tesla's CEO specifically called out tariffs. Let's take a listen to that.
There's a lot of uncertainty around tariffs. Over the years, we've tried to localize our supply chain in every market, but we are still very reliant on parts from across the world for all our businesses. Therefore, the imposition of tariffs, which is very likely, and any reciprocity will have an impact on our business and profitability.
So, George, I mean, how much of a headwind do you think, if Trump goes forward with these tariff plans, would it be for Tesla?
Well, it'll certainly be a tariff. Let's not forget that Tesla, in its energy storage business, uses, for the most part, battery cells that come from China, so that'll impact them. They also buy other inputs for their vehicles from other parts of the world. Fortunately, they make most of their vehicles or all their vehicles for the United States in the United States. So it's not as blunt of an impact as it'll be for other OEMs, but it'll certainly be an impact, and it's something that we're watching closely.
George, what about the distraction? Is it a distraction of Musk in the White House? And ultimately, what does that trickle-down effect look like?
Look, I try not to talk about politics at work, but it's clearly this is a person that does a lot of things with a lot of companies and now is working with the administration. You sort of asked about it yesterday, and he maintained that Tesla's a really well-oiled machine that is operating well without him. And look, anytime you doubt Elon Musk in terms of his ability to juggle multiple CEO jobs and other things, you've been proven wrong. So we think he could pull it off. And the things that are happening with Tesla in terms of their slowing or their slower than expected growth in 2025, I don't think has anything to do with his ability to manage. It's more just the macro.
So, George, it sounds like the benefits of him then having the close ear of the administration playing a part in the administration certainly does then outweigh any sort of risk.
Look, I think the one area where the administration could help and probably will help is in terms of the adoption of full self-driving and autonomy. Yeah. We've already seen very positive commentary from the Trump administration around their willingness to help U.S. companies proliferate autonomous vehicle solutions in the United States. It's really, really important to Tesla's story. It's also important for other companies that we cover, including Aurora and Mobileye. So we think those tailwinds should outweigh any near-term headwinds from tariffs or anything like that.
George, we're going to have to leave it there. Appreciate you joining us today.
Thanks for having me.